Hello, everyone, and welcome back. So this episode is a beginner's guide to M&A, so your path to your first acquisition. So we deal with many people in very different varieties, some very inexperienced, some massive corporations that want to grow through acquisition that will use us as our, I suppose, M&A experts. But we wanted to talk about the beginning part of the process. So there was a chap that we helped work with, I think it was probably about 7 or 8 months ago, that had been trying and failing to buy his first business for about 4 or 5 years. He had a great understanding, but also just it's a very hard, complex world out there. So 3 months into working with us and having our help and our guidance, he managed to make his first acquisition and subsequently has now made an additional acquisition just last month. So it shows the importance of working with decent mentors, having the right people around you, the right teams of people around you. But I wanted to talk in a way today, Paul, that can highlight if somebody's starting this journey, I suppose how to avoid some of the mistakes and errors that we covered off in our last episode, but how people can really fast track and get through this process in a more efficient way. So for somebody that's new to M&A or thinking of getting into, the wonderful world of buying businesses, firstly, just break down exactly what mergers and acquisitions means.
Yep. So acquisitions are the acquisition of a company. That could be buying 100% of it. It could be buying a smaller percentage of it. You're basically acquiring a stake or full ownership of a company. And a merger is effectively when you start putting companies together. So maybe you're going to use shares, for example, as a currency to do deals. So let's say you already own a company. You see a competitor that actually, if you felt, if you're working together, you get a better result. So you might choose to, create a holding company and basically you end up with, both of you end up with shares in the top co, and you effectively merge with either a competitor or another tactical acquisition. Yeah, that's effectively long and short of what M&A is. But it is a way to really 10x a business. M&A can be used to significantly grow a company. It can help diversify and reduce risk. And of course, why are we all doing this? Well, it's to create wealth and opportunity for everybody involved.
Okay, so somebody now knows what mergers and acquisitions means, what it's about. What are the first steps they should take if they're interested in M&A, and how can somebody with, say, no experience whatsoever in M&A start building the right knowledge base?
Yeah, so I suppose I sort of, if I look at my own journey, I was sort of inspired to get into M&A through the TV program Dragon's Den in the UK. It's called Shark Tank in the US, where effectively entrepreneurs go before a panel of wealthy investors, entrepreneurs, and they basically pitch their either startup or established business and say, I'm looking to raise this amount of money and I'm prepared to give you this percentage for doing so. And then obviously they act not just as an investor, but also as a bit of a mentor to help them on that whole journey. And I guess, I started out by researching it. I thought, I'd spent 7 years at this point building a startup, which I'd sold. So I felt I had a good, reasonable level of understanding of how business worked through that sort of practical, 7 years of building a company and then selling it. But I didn't know a lot about M&A. All I knew was that potentially it was probably a quicker way to creating wealth and starting another business because, in a startup, you've got no brand, no customers, no staff, no business model, no nothing. And you've got to create all of those things. And that can be quite fun. But with M&A, you could buy a business on the same day you then bought a customer base, a brand, a business model, profits, cash flow, all of those things that you don't have to create. And then you can bring your expertise to making that business more, more profitable through maybe improved marketing or sales or other things that you can do. So, my journey started like that, and really looking at people that were successful in M&A. What are they doing? Consuming content online. Obviously, this was back in the day before podcasts, but looking for sort of, online videos, attending networking events where prominent people were speaking about their experience, consuming as much content as I could, reading books, etc. So all of those things is really where I started. And then sort of complementing that with mentors and coaches, people that have been, quite prolific at deal making and learning from them.
So I'd like to think at this point, most people aren't going to be particularly scared. And I think most of those things are very easy to do and can be done very quickly. I mean, thankfully, we live in a world now where we have access to internet, to YouTube, to tutorials. There's loads of content out there. So people can really start to educate themselves. And I think those that are still interested and want to do something with this, the next step of the process really is to figure out what type of business is right for you to acquire. Is there a simple formula, a simple thing that people can put into process to go, right, I'm now going to go and acquire XYZ company? Or should they keep a very open mind? Or should it be within a sector that they know? Or should they think, well, no, it should be completely separate from what I've done in my background?
Yeah, so when I started out doing this, I'd spent 7 years building a recruitment business. So some of my first deals were in that particular sector. And I guess that I felt confident talking to a business owner in that space because I spoke their language, I understood the business, I understood the industry, I knew people in the industry that we could have a common, conversation about. And I just guess I felt more comfortable talking about something that I knew than something that I didn't. So I think whenever we joint venture with people, and we've done over 100 transactions over the last 15 years, and the vast majority of them are on a sort of joint venture basis. The ones that are the most successful are when we're working with somebody that is focused on a particular industry. So this will be somebody that either has worked in the industry, owned a business in the industry, sold a company in the industry, has contacts in the industry, is passionate about the industry, or all of those things. And I think if you've got that level of experience, then you're more likely to feel comfortable having those conversations with business owners. But more importantly, when we actually buy a business together, you're going to know what levers can be pulled to make that business more successful because you truly understand the industry.
Okay, so let's say you've figured out a sector, an industry to get involved within. So the next step is obviously trying to find the right opportunities. Let's presume that you've managed to find the right opportunity. How do you actually go through that process? It's not as easy as people might think. So I think a lot of people might presume that you go straight to Mr. Business Broker and that person's going to say, here's a list of companies in your sector for sale, and this is how much they're worth. Should they do that or should they think differently?
So I'm sure there are some good brokers out there, but of all the deals I've done, only three were when a broker was involved, and I would say that we definitely overpaid for those three. So I would start by looking at the industry I want to target, producing a target list, and then doing some sort of outreach where you can deal directly with the seller, the principal of the business, because they're the decision maker. They're the one that you've got to convince. There's nobody in the middle that also needs to be convinced or might have their own agenda that could potentially mean that the deal doesn't work. So yeah, I would basically build my own list. I would then contact those people, and then I would start having conversations going, and I would stay well away from brokers and corporate advisors for those reasons. And when you're sourcing opportunities, it really depends what you're looking for. If you're after, like us, consistently profitable, well-established companies, you can use credit checking software. There's various softwares out there that can help you, excuse me, identify those people, and then it's just a question of then contacting them and starting that conversation. If you're interested in mergers and acquisitions, we have a free to join community of deal makers around the world where we share knowledge, expertise, deals, and joint ventures. I produce regular content there, and it's the first place that you can see it. So if you'd like to find out more about this and how we can joint venture together, I guess the vast majority of deals that we have done have been with joint venture partners. And I guess to get to 100 plus deals, there's only so many hours in the day. So by sharing the work with like-minded others, we can increase that bandwidth. So to learn more about this and to join our community, visit buybuildsellprogram.com.
Okay, so you've potentially got a list of companies in front of you now. So now the key part is to start thinking about how you can pull off that acquisition. And the key part of anything is obviously the funding side of things. So some people might have capital, some people might have very limited capital. What is your advice for people? Because I think when I first looked at mergers and acquisitions, I genuinely presumed everybody just wrote out a check. There's your check, Mr. Business Owner, and off they go to buy a yacht in the sunset. What I later probably found is very, very few companies in the entirety of the world are bought in that way, shape, or form.
Yeah, so I mean, if you look at one of the biggest deals more recently in the last few years, it was when Walmart sold Asda supermarket in the UK in a $10 billion deal. That was principally funded with a consortium of banks, so the money was borrowed to do the deal, and that's typically how most deals tend to transact. Um, I've used and continue to use 13 different ways to structure a deal, and only one of them involves actual cash, putting my own money in. One of the first ever deals I did, like you said there, Ben, was I thought that the way M&A worked is you write out a check, you buy a business, and off you go. So I put my own money in, I borrowed money off friends and family to do the deal. And that's how I did one of my first ever deals. Now, generally, we tend to look at the deal initially and say, well, what's the motivation of the owner? What are their expectations? And can we basically figure something out that meets their expectations and is comfortable for everybody? So, yeah, one way could be a leverage buyout. So you leverage the assets of the company that generates a down payment, and then maybe there's some sort of seller financing. You could use earn out. If you own a business already, you could potentially merge it with something that you already own that has value. You can leave them with equity so that they have a stake in whatever it is you're creating, and they're going to benefit from your exit when you get there. There's lots and lots of different creative financing structures that aren't necessarily just about cash. Cash is just one of those, and generally most of the time, cash is a very small component of the deal. So yeah, there are many different ways that you can structure a deal that doesn't necessarily have to be cash, but you can take on the debt, against the balance sheet of the company, and use their assets as collateral, and then you can have some sort of seller financing. That's typically how most deals tend to get done.
Okay. What are some of the key factors to consider then when evaluating potential acquisitions?
I guess it'll really depend around your own individual M&A strategy. Just because it's what I look for doesn't necessarily mean it might be right for you. We buy well-established, profitable, consistently profitable companies in fragmented industries, and then we deploy our buy, build, sell model where we effectively roll up in that industry. We consolidate a number of operators, we build a larger group, and then we sell. So the important things that we're looking for is the financial health. So we're looking for that consistency, that margins are consistent, that if there is any debt within the business, that it's all manageable and affordable debt. We're looking at the operational efficiency of the business. So what's the quality of the management, what's customer loyalty like, and then we're looking at the wider industry and trying to identify what the growth trends are and how the sort of business fits within those trends and how we can capitalize on those opportunities.
So I think due diligence sounds quite an intimidating word. I think for beginners, it might not even be a word that you think about when acquiring a business, but it's imperatively important. How can beginners actually approach this in a really effective way?
Yeah, so due diligence for me is twofold. Number one, you're wanting to satisfy yourself that you actually want to do the deal. So you're looking for any risks, getting comfortable with those risks. If there's anything there that, is a red flag, obviously you walk away from the deal. And then secondly, it's so that you actually understand the business, so before you actually take over, you've got a real good understanding of how that business operates and some of the key legal agreements, the customer T's and C's, the supplier base, the financial operations of the company. You understand all of those things. So if you're going in with your eyes wide open. We actually have a team here, and we also work with external professionals to manage that process. So, for example, we have a lawyer that can deal with the legal side. We have accountants that can deal with the financial side. And effectively, it's basically asking for a list of information. They upload it to a secure data room. You then review that with your experts, and you figure out, if there's any further questions or reasons to ask for more information, highlighting any risks, and then figuring out how you can mitigate those risks or try and protect yourself maybe in the eventual contract. If we've done our sourcing right and we've got a consistently profitable, long-established company, it's very rare for there to be any major issues that would put us off. I'm not saying it doesn't happen, but it's a very rare event because we've already sourced a well-run business that probably won't have any issues, but we'll still run the due diligence anyway, just to figure out that that is absolutely the case.
So what are some of the common mistakes that people would make, and what should people be looking to try and avoid on their sort of M&A journey moving forward?
Yeah, I think there's a few things. I think number one is rushing the process. It is a long process, and the more time you spend on it, the more time you have to build communication, relationship, trust, rapport with the seller. You've got more time to really understand this business. I think that that's quite important. I think there's also one of the common mistakes that people make is basically overpaying for business in their eagerness to just be able to close their first deal. And nobody wants to be in a situation where they're over leveraging themselves or they're getting into a deal that just doesn't stack up financially because just because the seller wants more money doesn't mean that you should offer it. And I'm a strong believer in you offer a fair deal, and if it doesn't work, park it and revisit it in a year's time when the owner's expectations or motivations may have changed or become more realistic and more fitting with what you originally offered. So yeah, having that perseverance is quite important. Obviously, the due diligence side of things, neglecting that or failing to fully understand the business is another common mistake that people make. And I think doing deals is fairly straightforward. It's time consuming, of course. It's a long process, but it is a process. And if you follow it, you can get deals done. That for me is the easy part. But actually, when you own the company, what are you going to do with it? So making sure that you've got a strong plan of how you're going to integrate and manage that business. And again, one of the common mistakes that people make is they think that they can just figure it out as they go, and they don't have the plan. They maybe underestimate the potential integration issues that you're likely to experience, and how you're going to manage the business and what you're going to do to make it perform. And if those things don't happen, what you're going to do about it. So I think having that plan is very, very critical. And a lot of people that get into deals that don't work out, generally it tends to be one or a multitude of those reasons why those deals can then turn bad.
So for those that might be a bit nervous about the idea, I suppose there's no right or wrong answer here, but some people might feel that the best path for them is to start a business. Others might be interested in trying to acquire businesses. There are pros and cons with both, and I suppose it comes down to who the person is and where their comfort levels are and their expertise and how qualified they may feel to be able to do one of those. What's your opinion on both? Do you start a business or do you buy a business?
Yeah, so if I look back on me now, so my one of my first ventures was a startup, and I spent 7 years building that business, making a lot of mistakes along the way, but it was probably a significant period of my own learning, from working for somebody else to then ultimately the book stops with you as the business owner. And you've got to figure out all of the problems and challenges that are thrown at you, not just generally in business, but in a startup, it can be quite overarching. So I wouldn't change that experience because I think I learned so much from that 7 year journey. But from where I am now, I would never dream of starting a business because I can go and buy one. And the benefits of buying one is you've got a name, you've got a customer base, you've got cash flow, you've got proven systems, you've got the longevity of the business, where in a startup, you haven't got any of those things. You've got to create those things. So whilst that can be a fun journey to go on, and I would certainly recommend for people that want to seriously get into M&A, if you've never ran a business yourself, I think you will find it very tough. I'm not saying it's impossible because, of course, there's people out there that have done this before. But I think if you have that experience of going through a startup and all the challenges, if you can successfully turn a startup into a successful, profitable business and sell it, I think you're in a much stronger position to be able to go and then buy companies because you have that experience. Whereas if you haven't done any of those things, you're going to, the M&A side of things is going to be more of a learning curve. So I would certainly advocate for acquiring a business rather than starting one, but that experience can be quite useful in the things you learn from a startup applied into M&A.
So would you advise people starting out in M&A to go out there, find mentors, advisors, people that can offer help, support, guidance?
Yeah, so I think in my experience, my first deal was a bit of an accident. It was a business within my family that was struggling, and I saw an opportunity to. I could easily see what the problems were. I knew what I needed to do to fix them. So whilst I had a full-time job, I acquired this business for £1, fixed all of the things, and then I sold it within 18 months. And then that gave me some capital, and I decided I was going to start a business. So I started a recruitment business, did 7 years of building that business up and then selling. And I guess at that particular point, I was inspired to get into M&A by the sort of Dragon's Den, TV program where people pitch, their businesses to investors for a percentage. And I thought, well, I'd like to do that. I quite fancy getting involved in multiple businesses and applying my expertise that I'd learned in my startup days. And I spent basically 4 or 5 years on the M&A trail, working 60, 70-hour weeks, and very much had the um, opinion that, look, if I was buying or investing in a company, then I needed to be there calling the shots, making the decisions, being the MD. And I guess whilst I made some reasonable money and, we had some good successes along the way, my paradigm shift came in around about 2015 when I guess I got to a point where, I was working long hours and I was making reasonable money, but didn't really have the time to enjoy that money. And I basically thought there's got to be a smarter way to do this. So I went out and looked at who's big in M&A, and I connected with some people, and I basically found a mentor through that. And this was somebody that had done hundreds and hundreds of deals, and I learned an awful lot from, not just in terms of how M&A should be done, but it also changed my perspective on actually how things should be done. So I shifted from being the MD, the owner, the operator, to basically being the deal maker. So, since then, I've not got involved in the day-to-day runnings of the company. We have a team of people that do all of those things. So my skills are in finding and doing deals, not necessarily in running companies. So having that mentor that helped me change my thinking was important, but also some of the mistakes that he had made in his career, he was able to learn from those mistakes and share with me and sort of say to me, look, don't go down that path, Paul, because I've done that and this is what the result was. You should do this instead. And I think that was quite invaluable. And I think the proof's in the pudding. I think we'd done 6 or 7 deals in 4 or 5 years. And then we subsequently went on to do, 90 plus deals since 2015. So really ratcheted up the volume. So I think having somebody that's been there, done it, worn the t-shirt, speaks from experience, probably made some mistakes along the way and learned from them. I think that all of those things provide people an opportunity to learn practical skills and ultimately build confidence through that sort of shared knowledge.
Are there any sort of resources that you would recommend to somebody that's starting this M&A learning process to build their knowledge?
Yeah, I mean, obviously we live in a very digital world now, so there's lots and lots of information out there that you can get hold of for free. Even on my own YouTube channels, there's lots of content out there for free. We have our own community, a dealmaker community that you can join, where there's like-minded other deal makers that share expertise and look for joint ventures, and there are obviously good networking opportunities, and there's many other of those types of communities out there. So I probably consume lots and lots of information, content out there, YouTube, websites, books, etc. I've written 2 books which might inspire you. One's called Buy, Build, Sell, which sort of charts the 20 years or so of my business career, and one specifically on the leverage buyout structure. You can buy those from Amazon or from my website if you're interested. I'm not trying to plug my books, but there's plenty of other people out there that have written books on M&A to you can consume that knowledge, attending networking events and going to local business groups where M&A professionals gather, I think is another route. Just really trying to create that habit of continuously learning from other people that have done what you want to achieve.
Is it hard for a beginner to build that network?
No, I mean, I think 20 years ago, before the internet really sort of took off, I think it was certainly much more difficult. But in the very online world that we live, I think it's very, very easy to find people that can help, and you can build that network. So, looking at local industry events, local business meetups, if you're focused on a particular sector, is there some sort of, expo conference where professionals in that industry gather that you can go and chat to. LinkedIn, you can connect with people around the world, M&A professionals, business owners, etc. And joining an M&A focused community or mentorship program potentially, so that you can exchange ideas and opportunities. I guess they would be, for me, the areas that I would probably start with if I was starting again and wanting to build my network.
Okay. And is there any particular advice that you would offer to somebody that's starting to their M&A journey, or if you were talking to Paul 20 years ago, the advice that you would give?
Yeah, so I would say probably start out small. And by small, I don't mean the size of the deal. I just mean, it's great if you've got ambitions to buy dozens and dozens of companies and you want to go on a prolific M&A journey. But just start small. Just think about, where's my first acquisition? How am I going to get it done? Um, you know, Keep learning along the way, and focus your time on building relationships with people. Certainly don't rush into a deal. Take the time to learn the process, understand the market, how it works, be patient, be persistent, be open to learning from other people's experience, whether it was a success or a setback, because I think mistakes can be made, and as long as you learn from them, I guess it's okay to make mistakes, but I guess that can hone your sort of strategy and thinking about how you'll tackle scenarios.
Okay, perfect. Well, thank you for your time, as always. I think this episode's been very much guided towards those that are wanting to get into the world of M&A. Next week, we are quite keen to talk about the M&A journey for people that are already involved within it, but how to ultimately make things more efficient and accelerate your journey from finding the first deal to actually closing and making it happen. And I think it's something that a lot of people always ask us, is how can I speed up this process? Because people are very keen to make their first acquisition happen, of course.
Yeah, great. I'll look forward to that episode. I think there's a huge opportunity out there, and if there's a way for you to accelerate your activity so you can 10x your M&A journey, if that's where you are and where you want to go, then I look forward to sharing some insights and into some of the things that we've done to be able to do that on the next episode.
Perfect. Catch you then.
Can I ask you a favor? If you like this content, then please do subscribe to the channel to receive more content like this as we upload it. It helps our channel and shares the message with like-minded deal makers. It also helps me to connect with our audience and bring you more content that you can watch.